This video is for all the money makers out there, man. If you worry about, how do you make money in the US stock market, step by step, man, how to do it. So let's get it started. I don't expect, to get everything I just say. If anything, I say that you don't get it, perhaps you can go, watch, some other videos, for more details, stuff like that. So I trust you do that. So let's get it started. The strategy, we're gonna work on is what we call options, spread options. Now, spread options, there are different kind of them. You got debit spread, you got credit spread, you also got put spread and call spread. And we're only gonna do it in SPY and NASDAQ. Why? Because there's a lot of things, we don't have to worry about. We don't have to worry about something pulled back and never came back. Those are the US stock market. So there's a lot of things we don't have to worry about. But please also pay attention. If there's a day like any kind of reports that will come out, just stay out. If you do plan, to open the trades during those days, make sure those reports already came out before you do so. And mostly, a lot of times they usually come out like midday anyway, so you're good. We all know, 9:30, that's when the market opens, right? Market opens 9:30. Pre-order fills. A lot of big institutions doing their thing, big traders doing their thing. So by like 11 o'clock, 12, going to 1:30, everybody want to get out, all the big boys. Because I guess they don't want to slip, with stocks or with anything, whatever they hold. 11 o'clock to 1:30, that's when you need to start pay attention to the market. At that time, you have an idea. Okay, what's the lowest the market went? What's the highest it went? Is it like sideways? Did it bounce during the day? It tank during the day? What's the deal? Now you have an idea. By 11:30 going to 12, set your chart. Your chart actually needs to be anywhere from 5 minutes to 15 minutes. You need to go in between. To me, 1 minute, 2 minutes, 3 minutes, they're pretty much like noise, If you're into like the quick in and quick out, yeah, you can do that. But 5 minutes to me, it kind of gives you that momentum. Hey, this is what it is. 15 minutes to me, it gives me that clear signal. Hey, now once that candle, is fully done, like 15 minutes candle, it's pretty much like, hey, this is it. Now, whether I believe it or not, whether I need to give it some more time is up to me. But to me, those are actually what work. The 5 minutes and the 15 minutes candle. Okay. Now, the kind of trades that we want to place, we want to sell a higher put, and then we're going to buy a lower put. So that would kind of give us something called credit. Now, the credit actually can be anywhere, between 6, 7 to 10, 20 cents, even 30 cents. Now, depending, that day. The gap actually will dictate, how much credit you get. So here's what I mean. Says like, if SPY, just one example, is trading like 537, and the lowest it went for that day is like 534. What we will do, we will sell a 530 put, and then we're gonna buy a 528. So that give us a credit right there. And if you want to just if we have enough cash on our account, so we can actually gap that down just a little bit more. So in other words, we can just buy we can sell 530 instead of buy the 528, we just go ahead and buy 525. So now the premium we collect is huge. And then keep in mind, you also put more money out. What's the point of doing this? First of all, the lowest the S&P, for example, the SPY, went for that day, you go 3-4 points below that. So that's kind of like an extra layer of protection. And then you probably like, man, so you only do this just so you can collect like 10 cents, 20 cents? Yes. How you make this money? You size up. So you sell like 500 contracts. So in other words, like, you buy 500 contracts, you sell 500 contracts. But the money is actually in the credit, because what you buy, it's lower compared to what you sell. And then 20 cents, you time that by 500 contracts, you're the man. Now keep in mind as well, every contract is worth 100 shares. So if I hope you do the math. So it's pretty much 500 times 100, and then you multiply that by the 10 cents or the 20 cents you collect. That's a lot of dough for the day. You done. Next day, rinse and repeat. I don't expect to get everything I just say. Just spend a little time behind it, please, and then eventually you get it. Key elements nowadays is a spread put. You sell a high put and you buy a lower put. and you go 3, 4, 5 points now below the lowest now the index went for that day, that actually gives you that extra layer of protection. You're good to go. Keep that in mind, stay away from single stocks. Now only do it in those 2 indexes I'm referring to, because the liquidity is high, and then those actually are the markets. So any bad day, you don't have to worry about. Next day, it'll bounce right back up, just in case that trade actually turned against you. But most likely, if you follow all the rules I just said, everything gonna be good and get this money.